Good morning and good afternoon and good evening to our audience, and welcome to this panel discussion. In Kenya in the past, we would all say, good morning, we've just had our coffees and back our trade and supply chain finance can play a role in revitalising the East African economies. I'm very pleased to be joined on the panel by Martin Azenga, who's the head of trade at Stanbic in Kenya, Cynthia Alubala, who's with Mars, and Philip Boyall, who is with Finastra, the Fintech giant. We're hoping that Gerald Kamagisha is going to be joining us from CRDB Bank during the session, but he's unfortunately had some issues in dialing in. But don't be surprised if his face and his name appears on the screen during the session. We would welcome him. And then with Carol Kihuna, who's with Equity Bank. I'm going to ask each one of the panelists just to briefly talk to us about within their industry, their recent experience within the pandemic, life in East Africa, and just give us a little bit of color as to what life means as a trade finance banker, as a fintech provider, or representing a fast-moving consumer goods company in the current circumstances. So I'm going to go straight to Carol, if you don't mind, and then we can go around the houses.
Thank you, and good morning, everyone. So I'm the trade product manager for Equity Bank, and just as you alluded to, Lodewyk, we are clearly in unprecedented times, and it's been quite a challenge, and our adaptability speeds have really been tested. So as Equity Bank, when we went into lockdown a year ago, there was quite a huge concern about, just basic survival. Do we have the right equipment in the country to protect ourselves, sanitizers, the masks, etc. So as an organization, first, it was about survival, just maintain the workforce, and even from a CSR perspective, just extend a hand to the community. So we did go into our pockets and give significant donations to the tune of $30 million to the PPE drive, and just support some of the essential workers and the frontline health community as a start. So coming down now closer home to our clients from a trade finance perspective, of course, movement of goods was quite was impacted significantly. Vessels were still on the high seas, but flights have been grounded. We're not getting documentation. So how do we then facilitate movement of goods at the port? So such support like issuance of shipping guarantees really needed to come into play, offering sort of like bridging facilities to restructure some of the trade facilities we had for our customers at the time came into play. So there was a lot of balance from a financial perspective, trying to balance the issue of stock, not because we needed now to procure a lot of commodities, make sure that from an essential goods perspective, the country has food, just your basic needs. So that means we have to deploy resources, structure some of the facilities, and also try and extend moratoriums and be a bit adaptable with some of the structures. So some security discussions that we would not have had before the pandemic now are coming to the table to just make sure that we are able to get out of this situation as safely as possible.
Thank you, Carol. That's insightful, and sure. Yeah, I mean, one forgets the basic needs of the man on the street, and you tend to just look at the big picture. So thanks for that, Cynthia. From your perspective, I mean, having to move consumer goods in the form of confectionery and getting your product to your end users, procuring it. It must have been equally challenging during these times.
Yeah. So just to add more or less what Carol said. So for us, really, the first priority was the safety of the employees, just to ensure that they were safe, and to put in place measures in the factory operations, then to ensure then there is business continuity. Because as a business and especially as a manufacturing site, what you want to do is to ensure that you're responsive, you're agile, and you're able to adapt in the changing economic conditions. So that's what the business was looking at. And then obviously we were highly impacted by our supply chain. So at a point we were not able to clear our goods at all. And so what meant was that then how do we ensure that we have enough in terms of materials that can just give us an opportunity to produce goods. Then obviously the lockdown meant that we are as well not able to supply goods to our East African markets, Uganda, Tanzania, where our major customers are. So it was really a big challenge. And the organization was key just to ensure that, first of all, that we are able to make business continuity goes on. There's a safety of the associates and our customers. And then that focus really meant that then at least now we are able to bring our operations now into continuity. Yeah.
Sure. Thank you, Cynthia. I'm going to shift it a little bit. I think we all lived in the pandemic. It was pretty crazy. But maybe getting back to you, Cynthia, and I'll come to all of you in a minute, and also give you an opportunity just to give a little bit of color about your business. But I mean, you said just now that the business basically stopped. You were unable to move your goods. I mean, that's incredibly disruptive to the supply chain and the liquidity in the value chain. How did you go about assisting your customers, whether it's your vendors who were facing major liquidity problems or even bankruptcy, or how do you repowder the gun to get to market? I mean, what was the key issues? I mean, obviously from a regulatory perspective, if there's a lockdown and there's regulations, you can't move. But as the regulations started lifting, what were the biggest challenges that you saw?
Yeah, so just to respond to that, and maybe before I proceed, I'll just want to start saying, but from a supply chain perspective, and what we really look at as being an efficient supply chain, first of all, you need to be agile. You need to be adaptable to the changes that we continuously see in the market, both in macro and micro. Then you need to have very good collaborative relationships with your consumers. And consumers, I mean both your vendors and as well your end customers. So what we did as a manufacturing site is that we sat down as a business and we asked ourselves, how are we going to act collaboratively with our customers, just to ensure that with this current pandemic that we're experiencing, we achieve a win-win situation. So we reviewed our current operations, and then we make calls just to ensure that we are able to extend some credit facility to our customers so that they can buy goods and they can have enough stock that they can now be able to sell and at least pay us back. So that meant that us reviewing our policies and adjusting them, at least to support our consumers. And in this case, our consumers are the businesses that now sell into the markets, like they sell into the wholesalers, the distributors are now to the supermarkets. So it's a B2B kind of a network. Yeah, so that helped our customers to have enough stock. And by that, at least we were trying to manage that need to be always on the road, trying to deliver goods to the consumer. So they had enough stock to sell. And as well, that what that meant was that we were then able to balance between having cash versus having stock. So obviously, as an efficient supply chain, you don't want to have so much stock, because that means you holding cash into the stocks instead of having that money into the bank. So we did different simulations, and we made a call that for this time being, we will manage to have stocks at the consumers, stocks in the warehouse versus having that cash. And that meant then there'll be business continuity. Then the other thing as well we did was we really looked at our portfolio and asked ourselves, in terms of margins, which portfolio, what will be the right level of mix for us to focus our efforts on, that at least will make us still be present in the market, and from even making money perspective, we'll still be in the business. So we did a bit of conversations around just optimization of our portfolio, and making sure that where the portfolio, the right level of brands that give us the right level of mark are present in the market. Then the other thing that as well we did really just to manage this disruption is that at some point in time, when I explained to you that our shipments really delayed, and for like 2 weeks we were not able to produce because of that disruption, we had to make calls and just do airlifts, and that meant that at least then we will still be able to manage the business continuity, despite the risk of having that increased cost to the business. And obviously we had to do simulations, the risk of not being in the business versus the risk of the cost of doing the airlifts.
Cynthia, that's amazing. I mean, so that the business had to adapt with the rapid response. I mean, you're a very big business, and I mean, you guys operate out of, I think, 50 countries in the world, and it's clear that you had to be innovative to also become a liquidity provider or a financier within your value chain. But let me go to Martin in Nairobi with Stanbic, and Martin, I mean, listening to all of this, looking at it post, I nearly said post-pandemic. It's not the case at all. But I mean, we had a major trade finance, and we've been talking about this for years and years and years at GTR conferences, is how do we bridge the trade finance gap? How do we bridge the infrastructure gap that gives rise to improved trade? And hearing from companies like the one that Cynthia represents, where companies had to go and dig deep and offer financial support to their customers. And frankly, I mean, we also saw, some of the international banks in this space withdrawing from the market. What does that mean for an institution like Stanbic, who we know very well, who's extremely well represented on the continent? But what was the institutional response? Because I would assume that your phone started ringing from big companies, SMMEs, across the value chain. There was just a huge demand for support from institutions like Stanbic.
Yeah, and thanks, Lodewyk. And I think that's an incredibly important point, and one maybe that we should spend just a bit of time sort of like just unpacking it and talking about it. And you put it rightfully by saying that the trade finance gap is something that has been there. We've repeatedly talked about it in the previous GTR conferences, and asked ourselves a question around what banks and other players or financial institutions and anyone who is involved in the trade value chain ought to do or needs to do to really just reduce this gap that has been there. Obviously, the pandemic is something that has just made it a lot more prominent, and obviously just picking up from Cynthia's point, the disruption that we saw in the supply chains right across the different industries and the sectors that any bank or financial institution would look at, all the more just compounded the problem. And just because we were confronting an issue that none of us had obviously seen in our lifetimes, and so it just became prominent all of a sudden, really just required Stanbic Bank, which is part of Stanbic Bank Group, or any other institution, to really just operate in quite an agile way to craft a response. Again, for an issue that no one or none has had an experience dealing with. Things that we sort of would have taken for granted, like the usual way of working, is something that had to be reconfigured. Trade as a business, which is obviously, as you like saying, a value chain anchored business and a flow type business that is heavily reliant on a back office or an engine that just keeps moving and pushing it along, really had to reckon with the fact that reconfiguration was necessary. The physical and social distancing meant that there was obviously some internal disruption in the ways that we are working. And because obviously we are part of an economy, part of a system whose wheels have to keep on turning, we really had to quickly craft a response around where to sort of place our staff or people who work within the trade business to continue offering these all important services to ensure that goods and services keep coming into the country, or what we need to get out of the economy or the country is something that is facilitated. So I think those are host of issues.
Martin, you touch on an interesting point, and it leads so nicely into something that I think Phil is burning to discuss with us. But you talk about technology, and Phil, you guys offer. I think I saw. I'm pretty much about most of the banks on the continent, if not in the world, are customers of yours. But you offer a fintech solution. And I'm always fascinated by. I'm not a techie for a long shot, but I'm fascinated with the role that technology can play within in a collaborative way, seeking solutions. Like here we're sitting in the middle of a pandemic, talking to each other from 3 different cities across the continent, sometimes even, I'm sure our audience is represented from just about every continent in the world. But where do you see technology or fintech solutions solve for the type of issues that we're talking about, whether it is for Mars in the confectionery value chain, manufacturing chewing gum in Kenya and distributing it through Uganda and Tanzania, or whether it is for a bank being concerned about its back office. Can you give us a little bit of color of what your fintech solution offers, one, and two, just where do you see those collaboration opportunities?
Okay, that's a big question, but I'll try and answer that as quickly as I can. So just to put some context around who is Finastra and what do we do, we are a global fintech, but we specialize in providing fintech solutions to banks, financial institutions, rather than corporate customers. So we provide the back office systems which banks use to process trade and open up their trade operations to customers. And that sits alongside other product verticals like retail banking, treasury capital markets, cash liquidity management. And we're a big player. So, for example, in the trade space globally, we process about 6% of global trade every day. And when you think about that in terms of a number, that's a scary number. We're kind of systemic in many of the markets that we're present in. And we're very present in Sub-Saharan Africa. We've got customers in East Africa, in West Africa, across all of Africa, to be frank. And the role that I play is I represent our sales proposition across Sub-Saharan Africa in the trade space. So listening to my colleagues just kind of articulating the challenges that they had is quite awe-inspiring, really, I suppose, because, from a fintech perspective, we're not close to the coalface in the same way that a bank or a corporate would be dealing with the immediacy of the crisis. And I have to take my hat off to the way that they've responded. We're one step removed, I suppose, as a fintech. But I think the thing that became immediately apparent to us as the crisis hit was it kind of changed the nature of the conversations that we were already starting to have with banks. And that was really, how do you automate more of the process that you have? Trade by its nature is a very manual process. It's document heavy. And how much of that, have we been able to automate up to this point? And it suddenly became, quite critical for many banks, where their customers were unable to access the branch network to actually deliver documentation and submit a request for trade finance, etc. And their own staff were then unable to be present in the branch infrastructure or the processing center or whatever. So what that did was accelerate a lot of discussion around, okay, so how do you digitalize a lot or more of the process that's involved, and how do you provide more digitalized access to your customers to speak to you, to interact with you as a bank. So I think what it's done is it's accelerated those kind of conversations, and as a result of I was going to say a short-term crisis, but let's call it a medium-term crisis. Actually, we're having lots of conversations now about how can a bank reposition itself, both in terms of, across a number of areas actually, in terms of its internal processing and the automation of those processes. How does it enable its customers across many different segments, be they multinational corporates like Mars, Wrigley, or be they, micro SMEs who may want to access basic trade services through a mobile phone or a tablet, how do you broaden your customer proposition through our product? So we're in that kind of space at the moment where we're working with banks to kind of recreate their proposition, if you like, or develop their proposition from what they've been used to for many years.
And that's fascinating, and it demonstrates again, the tenacity of the human spirit and just the innovation that this can create. But Carol, I want to come back to this to the trade finance gap and the disruption. And without putting you on a spot as equity bank, but what we also saw was it was as if the development finance institutions have also been increasingly influential, if I may dare say that, in unlocking some of the finance opportunities by facilitating a multi-source, like a multi-source ecosystem, giving support to local banks, the role that specialist funds or private credit plays in the market. And Phil, I want to come back to you again, also just on the non-bank side. Where do you look at the opportunities, and equally with you Cynthia, as a credit provider, as a corporate being a credit provider. But Carol, do you? Obviously, we've spoken about the international banks having withdrawn, and let's not beat around the bush about that. It's a fact. They've exited a lot of the structured trade and commodity finance deals, whether it's a perception of risk, whether it is a function of costs associated with regulatory capital, or whether it's cost as it is associated with managing the deals. But do you see an opportunity for banks to maybe move a little bit out of their comfort zone and say, my mandate is a little bit broader now than what it may have been in the past, just because of the circumstances that we find ourselves in and in trying to close this finance gap?
Yes, absolutely. So we are in a unique situation, and the more people that come to the table, then the better it is for everyone involved. So we are looking at something that's not affecting one particular market or region. It's a global situation that we all need to come and put our heads together to see how do we then mitigate the risk, ensure sustainability across the value chain, to see us through this unprecedented time. So DFIs come in quite strongly to help us try and mitigate some of the risk. In terms of trade finance, we all know the concerns around AML, credit risk, foreign currency risk, political risk. So there are quite a number of risk items that commercial banks are not too strong in. And looking at a pandemic of this nature, then we cannot completely isolate the government and the related institutions in trying to come together and work with the private sector to try and mitigate some of these items. So DFIs who are better placed in analyzing some of the sovereign risk elements, and they have a bit more appetite in certain areas that commercial banks don't have, then come in as critical partners to help us at least unlock some of the challenges in the value chain. Even other partners such as insurance companies. So credit risk insurance becomes a very big item that we still need to unlock. We were looking at going full into the Continental Free Trade Agreement, and we were, with or without the pandemic, we were never going to have those discussions in isolation. So DFIs,
I think that's,
yes,
I think that's the point.
Yes, they're going to be part of the discussion. So how will governments come in to help us mitigate some of those risks? So the collaborations, and I think where we are going, the pandemic has forced the collaborative discussions to come in more aggressively than they would have. So we need, as Africa, we all know the cost of infrastructure transport is really the highest in the world. So how do we then support Nigeria, for example, with milk supply? Because if we have an interruption with supply chain, I cannot get things from China or India, looking at what is happening right now, then we have to look at intra-Africa trade. But how do we then manage that? So insurance comes in, DFIs. There's someone, TDB, for example, Afri-Exim, their presence in Nigeria will really help me as a Kenyan bank make a decision as to whether to support players in that market or not. So yes,
and we're gonna get to that free trade agreement in a minute. But I would like Martin's view on, Martin, from an international perspective, there's still this battle for influence on the continent, and I recently read a report on DFI commitments to infrastructure funding from an international perspective, and I was amazed to see that China remains the top investor into Africa, but there's also green shoots as it relates to the Biden administration or the US administration and how they may post-Trump look at supporting the continent. You spoke about the real importance of infrastructure being looked at as a critical resource to be funded. There's also, just in this week, one of the major African agri companies announced that it has support from the UK, from the CDC, which means that there's UK priorities post-Brexit seems like it may have shifted. What are you seeing in the region from a trade perspective, but from a broader international response into the markets that you operate?
Yeah, and I think that's an important point, Lodewyk. I think the first thing to say is, which is obviously a statement of fact, is that we obviously, as Kenya and obviously East Africa, and maybe the greater parts of Africa, still have a huge infrastructure deficit. And we will still continue seeing massive investment that is going into this particular area, just for purposes of the respective African countries, sort of like catching up, modernizing their economies, making it easier for the movement of people and goods from one point to the other, in a way that also just breathes life into this continental free trade agreement that has recently just been inaugurated. And obviously China will continue remaining a force in as far as providing financing into the African continent to bridge this infrastructure deficit. We are yet to see sort of like lots of players, especially by the Western countries, US now under new administration, and whether the stance is going to sort of like shift more to extending their influence abroad through financing of such initiatives as infrastructure versus the nationalism that we saw being quite promoted by the previous regime. But as things stand now, I think China remains a force in ensuring or playing a part in getting this infrastructure sort of like deficit breached. And I think the important point there, obviously, Lodewyk, then would be that if you are promoting infrastructure development, then it essentially means that you're making trade a lot more frictionless. We want goods and services to move in a seamless and frictionless manner. And the one thing, obviously, that is really going to promote that is infrastructure, physical infrastructure that will ensure that this movement happens in a way that promotes the trade that all of us are seeking to ensure that obviously takes root within the African continent. I think equally importantly, Lodewyk, could be the fact that the financial infrastructure also remains an area that needs to be developed, even much more significantly than what we are seeing on the physical side. It's absolutely pointless in moving.
That's a very interesting observation, because when you think of infrastructure, you think of road, rail, port, and financial market infrastructure is obviously critical, whether it's for de-risking, whether it's for liquidity. I think going forward, we're going to have some very interesting conversations around cryptocurrencies and alternative regulatory regimes as it relates to the movement of cash across the continent as we develop the Africa Free Trade Zone. But Phil, financial infrastructure, your Fintech's contribution to bridging that gap, where do you see it? Because I think it's more than for banks just reducing costs. It's that collaboration opportunity that you were talking about as between the consumer and the financial provider, or the alternative finance provider, or the de-risk.
Yeah, and that's a question as well. So we're a vendor, obviously, to the banks, but my own background is as a banker. I spent many years in banking, so I always try and see through to who are the bank's customers, because that's ultimately who they need to provide the proposition to. And when I think about the free trade agreement from a fintech perspective, from Finastra's perspective, what can we do? So there's a couple of things, I suppose, really, which is how do we make it easier for banks to offer trade services, or a trade platform, or a trade portal, say, to customers who would otherwise have found that difficult to access or prohibitively expensive, etc., etc. So there's a kind of a cost reduction and a revenue generation opportunity that exists there in terms of introducing new customers to the bank. Then also, I think Finastra can't deliver a full end-to-end service from a local perspective, so we have to collaborate. We have to open up our services to enable local fintechs who have great ideas, who recognize the opportunities in the local market to provide additional value services. so that they can integrate into ours and into the bank to offer a wider range of services that speak to the free trade agreement. That's the second thing. And then I think the third thing is, look, we've all got a dream of trade or the free trade agreement being coupled with the notion of a real or otherwise single currency across Africa. And I think, that's some years hence, if we ever get there at all. But there are still things that we can do in terms of making the physical movement of funds alongside the physical movement of goods and services, making those funds move better, quicker, faster, real time across borders, so that settlement can occur much quicker, much cheaper, without having to, be backed by dollar, without having to go through that kind of process. And those are the sorts of things that we're looking at as well. And I think, we can work collaboratively with banks who have a regional footprint to enable those kind of services. And I suppose there's one final thing really from a fintech perspective, and that is that we've got a bunch of banks that use our services, and we're beginning to think around, well, how can we tie these banks together in terms of, if you like, a trade block or a trade processing block that covers the whole of Africa, from a processing perspective, that they can perhaps offer out as services to microfinance banks or other financial services providers who are keen to kind of come into the free trade agreement but don't have the resources or the skills to do that. And then that can provide some kind of visibility or see through to the end customer and management of the risks of the supply chain, etc., etc. So there's kind of many things that we're trying to consider and map out and kind of generate a new way of doing things on the back of the free trade agreement.
I mean, and to speak to the point that Carol also raised earlier, and that if we think about it, we're talking about 1.3 billion people and 55 countries across the continent. Potential revenues of about 4 trillion, and it's maybe one thing that this pandemic had done is that it's caused us to think beyond just our own territory and our own jurisdiction. And I'm just thinking access to data. I mean, isn't that one of the biggest challenges that we also find in the trade area? But Cynthia, if the markets open up, as a manufacturer and as a distributor of confectionery, I mean, what do you still see as the biggest barrier to getting us to, the East African community has signed up, they've offered their tariffs, there's effectively the agreement was supposed to commence, we were supposed to commence trading in the East African bloc in January, but yeah, what are the biggest issues for you as a company when you think about, I've suddenly got a block where I can trade freely in a single market, but knowing that today that is not the case. So what are your major concerns?
Yeah, so one of our major concerns really is around the cultural bias in the way we do business within the East Africa bloc. So obviously there's that perception that it's free in quotes, but then when you attempt to move goods within the region, you still struggle from that. I don't know if I can say it's mindset or it's the culture of the people the different cultures we have within the East Africa. So as much as we will be unlocking the market itself, we need to review some of these things that are not written somewhere, but obviously they affect the trade. So we need to review them. And then as well, we still need to review the finance itself, because you see our customers struggle to get money to pay for the goods. So how do we ensure that then our customers within the region are able to get access to affordable finance? Because there's one thing to have the finance and there's another thing to have it at what cost, so that they're able to freely access it and use it to do their business and grow it. And then maybe just lastly is then how do we then ensure, because even from a currency perspective, because you still struggle, do we need to which currency do we use? So obviously, like because of the dollar being the main trading currency, and at the moment we see how depreciating it gets, and it really affects from a currency impacts. How do we come up with a currency for East Africa that we can trade within it, and that will then reduce the reliance on the dollar? So those are the things that we need to review, as by and large, as we discuss the trading block, really.
So really, there needs to be a little bit of a refocus of the investment calculus, if you like. I know we only have 7 minutes to go, so can I ask Carol and Martin maybe just to respond to Cynthia, unlocking finance to the customers who consumes the goods, innovative ways of looking at just shortly. Carol, can I start with you? Is that a focus for Equity Bank? Where do you think the focus should come from, if not, in the traditional trade space?
Yes, so it's something that we are critically looking at, and the value chain or supply chain finance is something that we have been working on for a number of years. So we are cognizant that the way trade moves, you just can't stop at financing the corporate, and you have to look at the end-to-end value chain and see how you can plug in finance solutions all the way through the different players and stakeholders involved. So what we are currently doing, and equity is actually quite strong in the SME, MSME space. So, and it touches on what Phil had alluded to earlier in terms of how do you now combine technology vis-a-vis now accessibility to finance. So two things there. There's obviously mitigation of risk. So structurally, then getting sound and almost credit risk-free structures become a very big issue. We understand the challenges around security. So looking at direct commodity financing, where you're actually now self-securing through the stock, that's something that is quite active in terms of the discussions we're having. Items such as the credit risk insurance I'd mentioned before, is something that we are trying to see, will this help allay the concerns from a credit perspective in terms of how to deploy some of these funds. The other aspect is with the pressure that we've been facing on the liquidity. So capital optimization and preservation was quite an integral part. And now we're trying to see how do we safely deploy some of the dollars that we have, because we ended up in a situation earlier on, we didn't have the foreign currency liquidity because there was pressure on some of our export earners. But then our local currency took a very big hit. We're looking at now an 8% depreciation on the local currency. So we're trying to see, can we then deploy some of the excess dollars that we're now sitting on to allay, to relieve some of the pressure on the local currency? Of course, now you have to look at this in a very big context, and the question of collaboration that we mentioned earlier comes in quite strongly to see how can I then partner with Stanbic, for example. So the question of sell down comes in. Am I comfortable with a certain risk, but capital preservation is key? Can I sell that down to someone who has more appetite to allow me to take on more space in my book? So there are a couple of options that we have been looking at just to make sure that we are diversifying our exposure. Of course, essential goods and services have taken quite a big focus simply because of the environment we are in.
Yeah, Carol, thank you for that. It's, I'm going to leave literally 1 minute each. I'm going to start with Cynthia, then Martin, Phil. In closing, if we have time, Carol, I'm going to leave you to last. the Q&As, this is such a big topic, and I think we're setting the scene for the rest of the conference, but please, we will attend to those questions that have been coming in. And if there are any additional questions, please just send them. But please, can I ask Cynthia, 1 minute each in closing? We literally have 2 minutes and 30 seconds.
Yeah, so obviously the trade finance is a big opportunity that we really need to collaborate with each other and support the end-to-end supply chain from the providers of finance, and then as well supporting and ensuring that we're able to support the industry and just to mitigate and ensure that we are not ending up with our customers who are now facing bankruptcy and all that. So let's keep the conversation and ensure that now that we deliver something that will ensure that the GTR delivers some of the objectives and the customers the benefit from it. Yeah, thank you.
Yeah, maybe if I could go, Lodewyk. Yeah, I mean, at Standard Bank, we are guided by a very simple mantra. Africa is our home. We drive her growth. We are committed as one of the leading corporate and investment banks in Kenya and in the region to supporting our clients, obviously, through this wave, to unlock capital and deploy it into their businesses, and also just to look at a lot of non-traditional ways in ensuring that our clients access markets and investors from other parts of the world are able, obviously, to access the regional market as well through the deployment of solutions, of structures that really just allow the sets of clients that we are serving across different sectors, across different verticals, really just to undertake their business and their trading activities in a seamless and frictionless manner, as it were. Yeah. Thanks, Lodewyk.
Okay, a couple of words from me then. So, look, one of our brand mantras is the future of finance is open, and I think that's particularly relevant for this debate. I think open speaks to many things. It speaks to open platforms, open collaboration, all of the things which we're trying to do, and that's the basis on which we want to engage our customers, both current and prospects, in terms of let's collaborate together to create the momentum that we've already started to create through this pandemic and the opportunities that it presents to us. Let's carry on and drive them forward.
Thanks, Phil. I've just been told that we've been afforded an additional 5 minutes, so I'm going to try and deal with some of the questions that we've had. We've had quite a number of questions actually, but I think the question that stands out for me, and this could be an interesting one. Again, I'm going to ask for a minute each. But what are the main challenges that banks are seeing in adopting new technologies? And Cynthia, I want to include you in this because the question is also, I think, aimed towards the customer. And the part that I want you to focus on is the question asked, why would banks need to change in order to solve problems relating to trade and supply chain? Now, I know that's a topic of itself, but if you each can just give me or give the audience, again, literally 30 seconds of your time, if there's that one thing to solve, what would that be? And I'm going to start with you, Martin, if you don't mind.
It's fine, and I'll be extremely brief. I think if banks, financial institutions can use technology in a way that partners with our clients to assist them to achieve growth, then I think would have made a huge leap forward in ensuring that we remain relevant to the sets of clients and industries that they belong to as they undertake their commercial and trading activities. And obviously that looked at alongside risk management that technology brings, and obviously creating a higher sense of client experience and by driving operational efficiency. If we could do that and achieve growth as an outcome, then would have played a significant role in assisting our clients.
I must say, I like your answer. I really do. Cynthia, would you agree, or where do you see banks improving?
Yeah. So one of our principles at MAS Wrigley is mutuality principle, and really this looks at both MAS Wrigley and our customers and our trade partners, now being the banks. So I will really focus or ask the banks when they are using technology, or how do they use technology that will provide solutions that will be mutual to both the customers and the banks, and then they will all benefit from it. So let's look at it from that angle.
Fantastic. Phil?
Gee, it's like asking, I feel for Carol actually, because she's got to follow me, but how do you build on what's just been said? I mean, I couldn't agree more with what's been said. I think we're all going to use the C word. It's the collaboration aspect. So I think we've learned to collaborate more. We know we need to collaborate more. We need to look across different market segments, different opportunities, different products and services, and just do things in a different way, but do it together.
Carol, I mean that resonates with you. I can see
Yes.
your face light up. So it's all for growth, reducing that gap, and prosperity.
Yes, definitely. So customer experience is quite key, and also some of the data that we get from digitization or automation will really help us be more proactive in responding to customer needs, which ultimately does improve the experience. So it's all about collaboration and improving experience for all.
Thank you so much. I really want to thank each and every one of you for participating in today's panel. I think it is such a broad topic, as I said. Your contribution is really valued.